Day, the founder, basically responsible for designing the whole bugger. I know that Steve is originally, an Aussie, so that's what he said to me, and that's of VYFI. So what's interesting is VYFI is part of the Cardano DeFi Alliance. You guys were one of the earliest projects in that alliance. I know they're probably going to add more over time. Nonetheless, it is kind of like one of those OG DeFi projects. You guys have a lot of cool stuff on your roadmap, and we wanted to have you on for a variety of reasons. Vasil is happening. Wanted to check in with some projects like yourselves, see how that's going, what kind of impacts that will have later on. Just thoughts on that as a project lead. Obviously, talking about machine learning later on. I know you guys are doing a lot of cool stuff with that. You have planned a lot of cool stuff with that later on. But definitely want to dive into you too, Steven. So why don't we do that first? Thanks so much for coming into the show, man. And we'd love
Thank you so much for having me, man.
Hear your story a little bit. Yeah.
I did love your Australian accent as well. It's always fun as an Aussie to hear others try our accent. It's a bit of a funny one. The cheeky bugger.
If anybody that has an Australian accent and just sounds 10 times more friendly when they come to America, like we're all just like, wow, that guy's
it's a very upwardsly intoned accent. Like every time we talk, it's always going in an upwards inflection. So it always sounds like we're joyful.
Right.
So about me, I have a bit of a long history working in finance. So I originally studied physics. From there, I moved into working in a hedge fund where we specialized in bonds and interest rate notes and treasury notes and bills and shouldn't say we specialize in everything to do with interest rates, I should say. Now from there, I moved into banking and investment advice. Again, working in stocks and bonds, where I finally finished up in stock brokerage. And again, stock brokerage is just, I guess, investment advice while screaming, which is good fun. And that was my sort of 7-year career path through finance. In that, I spent a lot of time doing both from the perspective of quantitative stuff, running numbers on trades, looking at investments, analyzing markets, staying up to date with all the news from a macroeconomic perspective, forming opinions on the markets based on that data. So that sort of quantitative side was a large part of what I did. And I also did in large part, particularly, in the stockbrokering and in financial advice, is that customer side of things as well, right? So I would say it was pretty evenly split between the customer experience and the quantitative experience. And that's kind of why I think I've been poised in a position to be able to run a business like this where we are now, right? Because I've had both sides of the coin's experiences. I've never really talked about that before on a podcast. So
I think it's phenomenally cool though, because with the current, I was going to ask you too, because I know you're a little bit about your background, but that was a lot more. What do you think about the current macro financial climate right now?
Not financial advice, of course. Right. I was just talking about this one on a Twitter space recently, actually. It's good. People have me on now to talk about macro, and I love it. Macro is my favorite.
I mean, like, obviously, the short answer is it's not looking great, but like, there's like,
let's do the medium answer.
Guys like you is gonna bring some clarity, I think, and maybe some objectiveness to like what is actually going on.
Yeah, let's do the medium answer. There is a lot going on, right? So the Fed is about to raise interest rates by another 0.75%. So that is, or they might have already done it actually. So I'm pretty sure they did. I've just been so stuck in my own little world of crypto that I miss the interest rate moves now.
So that was the second. That was the second. I know that they were gonna
second basis point.
They're gonna keep. Yeah. So it sounds like they're gonna keep doing that.
And the yield curve, which is what we use to look at the projection of interest rates according to the market, is currently thinking that interest rates are going to hit 3% within 2 years. Right. So yeah, that's market expectation right now. Of course, the market's trying to guess the interest rates. There's a lot like trying to blindfoldly throw a dart at a dartboard, right? It's not going to be that accurate to the real result.
Okay.
It is gambling, of course. But that gives you an idea of the sentiment within America right now.
Right.
Now, at the same time, what's happening? The US dollar is getting stronger across multiple markets, which we need to reverse that thinking though, because it's not the US dollar that's getting stronger. It's every other currency that's getting weaker faster than the US dollar is getting weaker,
Right.
which means that whilst the US dollar has got a lot of inflationary pressure on it right now, and you as someone who lives in America can certainly see that inflationary pressure in day-to-day living, food costs more, gas costs more, everything costs more, right?
Yeah.
The other countries, unfortunately, are going through worse situations, which is why your dollar is getting stronger against their dollar, right? Now, what that means, and this is something I've been screaming to the high heavens for the last couple of years, but I don't have much of a platform. People have been printing too much money. Wow, shocker. Who would have ever guessed? But it's not just something that the Fed has been doing, right? It hasn't been limited to just America's been printing too much money. The money printers really began with Abe, you know, rest in peace. He did just get assassinated a few weeks ago. Abe from Japan, who began what was known as Abenomics, which was the first ever attempt at a central bank running a negative interest rate, which meant you have to pay the bank to put money in the bank account, right? And debt is essentially free. So it began there back in the sort of mid-noughts. I'm talking 2004 to 2006, leading into 2008, and then was really pushed after 2008. Now, other countries around the world saw Japan wasn't collapsing. Other central banks were like, wait, you're going against all classic theory and you're not dying. What's happening? And then they realized, wait, we can just print money. We can just print money and it doesn't actually collapse our economy. So other central banks started following in the same direction after the hit of 2008. And you'll see all the interest rates around the world just start doing, boom, all the graphs just steps down, right? From 2008 leading up until 2020, really. Then we were hit with Corona. And with Corona, we all of a sudden needed to really get liquidity moving because people stopped moving. So the only thing that the governments had in response was to get liquidity moving. And the central bank's way of doing that was to reduce interest rates even further, right? So we were already in this position where we were primed to print lots of money because we were following the lead of what seemed to have staved off a recession in Japan. Everyone has been in this position of trying to stave off recession since 2008. A massive macro change occurred. And all of a sudden was like, everyone went, well, we have to really lean into this motion to be able to ensure that we don't enter recession, right? Because essentially we're already at such a point that we've printed so much money that we've bought in. We just have to keep doing that to survive Corona. So we just kept doing that. Now Euro is parity to the US dollar, right? And now just to give you an idea of what that means and I live in Europe, right? I just dropped something, that's fine. I live in Europe and Euro being parity to the US dollar, that means it's dropped about 25-30% in the last 3 years, right? So that means that anything that we purchase anywhere in the world to import is effectively 25% more expensive. Now, you add on to that the inflation in the US dollar, so the US dollar is buying you less goods, right? So I have to make these exchanges to buy things that are already expensive because of inflation in US, and it's costing me 25% more euro to get it. Right? So that's why we have situations where a gallon here, if I'm not incorrect, is 3.3 liters or 3.2 liters. Don't hold me to that. I could be a bit off.
I am not the person to ask about.
But in Italy, a gallon is somewhere between $7 to $9.
Mm-hmm.
Right? It's just insanity.
That's really
anyway, so my major point being is we have now hit a point where the governments have realized the damage that we have done by this endless money printing. Wow, shocker, shocker. No one could have ever told them that. You didn't need to sit into just like a first ever econ lesson at university.
Well, no.
Anyway.
So like, yeah, keep going.
No, you go. We're about to hit the credit crunch. That's all I'm saying.
The credit crunch.
Yep, the liquidity crunch. So now interest rates become higher. We're trying to stave off mass inflation. But that means debt becomes more expensive and everything is being juiced by very cheap liquidity. What happens when the oil stops running in a car? Everything starts to just slow down and smoke, right? And that's essentially what we're going to be seeing over the next 2 to 3 years, is this slow grinding as that liquidity becomes harder and harder to access. And it's not Biden's fault. It's Powell's fault. I will actually say it is Powell's fault. Great. but I don't like Powell in the least. The man that literally came out and said, "Oh no, this inflation is merely transitory because people are staying home and buying more." And I'm like, yeah, it's definitely got nothing to do with all the money you're printing, right? Yeah. Anyway, Gregory Powell, it's his fault. Stop blaming Biden. Stop blaming all these other people. It is the central bank's fault. Politicians don't have that much control over this.
What do you think? Did you see this just broke like 2 days ago? So I'm not sure if this is going to happen. It looked pretty legitimate because you had India, China, Russia, and I believe a couple other countries and the leaders all holding hands together, creating a new reserve currency. Did you see that?
Yep.
Like, do you have any thoughts on that?
Yeah, I absolutely have many thoughts on that. The first one and foremost being that it's not going to be a super effective currency because it's a small block of the world's financial wealth. Small block is maybe not the correct words. Let's just say a smaller block of the world's financial wealth, right? So if you try to have a reserve currency that's only being supported by, a total of less than 15 to 20% of the world's economy, right? That's not enough to be able to maintain a global currency. What this is a show of political force to say that there are people out there and there are many groups out there that no longer want to follow the US dollar hegemony.
Yeah.
Now, what that is sending is a signal, which is that these parties are going to be looking for an out on the US dollar hegemony. And that, more than anything, rather than having a successful, stable currency there, can have a destabilizing effect on the hegemony that we have at the moment. And one of the biggest issues that you see, one of the biggest advantages you see with the US and why you guys, and I know your inflation is terrible, but why you guys have actually not inflated a lot worse than you have. Remember, half of every dollar that's ever existed in the US was printed in the last year and a half.
Yeah.
Right. So $1 and $2 existed in the last year and a half, but you haven't had 100 or 50% inflation. Right. And the reason being is because as the world's currency, you've got lots of outlet valves. Right. There's always going to be a Saudi Arabian prince who's happy to buy US dollar. Right. There's always going to be a Senegalese warlord that wants more greenback. Essentially.
No, yeah, because as other currencies are getting are having a worse effect than the US dollar, and they're buying the US dollar because it's not as
the one
bad
they
as
hold.
theirs. It's like
that's it. So basically, as all these other currencies are crumbling, and the US dollar is also crumbling, but you've got the world hegemony status, which means people are still moving their money to your dollar, right? That's great. That's really good news for the US, right? And that means you guys are in a position where you can print more money than is normally conceived, right? Which is why you'll see places like Britain, Europe, Russia. I shouldn't laugh, that's rude. But Russia, China has its own host of problems. We won't really touch those ones. But we will include it there. These countries are really going to start waning on this effect, which is part of the reason why I think Russia has gone to war, right? What do you do in times of, this is a big one that no one really talks about. What do you do in times of crisis? What do you do when things are about to go really bad? You build and you nationalize your base so that they can be supportive of your country. How do you do that? You go to war with somebody, and war is a nationalizing force. So I really think that
I like everything that you're saying. I've been reading a lot. Like I read Ray Dalio's book, Changing World Order. And yeah, it's definitely in alignment with everything too. What I was going to ask real quick was,
sorry, I got carried away.
No. It's totally cool. It's fun to talk about these things. What do you think about what does this mean for crypto and Cardano?
Yeah, that's the really big question, right? And that's why I'm here in this space overall. I'm of the belief, and I'm not going to say the belief is correct. It is a belief that crypto is going to be able to act as a unifying force to stabilize those that are in environments that aren't able to maintain effective currencies, right?
Yeah. Like third world countries, even in, yeah.
And we're already seeing it in places like Argentina, Venezuela, right? So Argentina has had the massive, I don't know if you've looked at the Argentinian peso, but that's been going wild for years, but in the last year and a half, it's gone extra wild. And I know many Argentinians that are doing their day-to-day banking in crypto now, right?
Yeah.
Why? Because that's how you can engage. That's how, as an Argentinian, you can have the capacity to buy US dollar, right? So as an intermediary step to protecting individuals through crisis, I see crypto as a fantastic tool. And if it can be realized in that manner through this shift that we're going through, then I think crypto, not only is it a tool for change, not only is it a tool for good, but it also holds the capacity to allow us to fundamentally rethink the way in which we organize our society.
I totally agree, man. It's going to be interesting. It's going to be a wild ride, I got to say. I'm excited that we're going through it together here, Steven. And
so am I.
so that was a great macro update. I think, man, it's so important right now that slowly and steadily people kind of are woken up to the macro. But what I was going to say,
just really briefly, I found a lot of people are looking for answers and questions around macro, right? Because everyone is,
they're starting to
scared of what's going on.
Wait, why are my, my eggs, $7, $8 in some places,
Yep.
But
absolutely.
So we're in an interesting place now. I was going to ask you quickly about the DeFi Alliance, and I know IOG Johnny and I believe the CMO of Charlie 3 are kind of like, they have different roles maybe in like helping to like what is kind of going on there? Like, are they're still rocking and rolling? The DeFi Alliance is still
absolutely. I can show you. I won't show it on camera, but I can show you how much rocking and rolling there is. I get woken up at all hours of the night with that thing beeping at me with people trying to organize stuff. Yeah. No, it's a good thing. It's a good thing.
No, I think I've been watching it since it first formed, and it's really cool to see. And I know Johnny came into a few of my spaces just updating us, talked to Damon a few times too. So like, that's so cool. So the DeFi Alliance, how often are you guys meeting? What's kind of, what's
once a fortnight is the main meeting, and then we've also got a developer meeting every week. The DeFi Alliance itself is kind of working on two fronts. So let me give you an example with the Vasil Hardfork. So the members of the DeFi Alliance, we were able to talk directly to Cardano. We were able to troubleshoot directly with them the issues that we're having with implementing Vasil on the testnet, right? And there wasn't just Cardano DeFi Alliance members, but there was a group of about 30 businesses with all the Cardano DeFi members there, plus a few others that aren't in that alliance, that we essentially have had a town hall every week where we can discuss, the issues that we're having, and we can have a direct line to IOHK. And a lot of those discussions have been guiding the actual path that Vasil is taking to launch, which is great that we're able to directly work with those that are launching Vasil, and they are keeping us in mind in the way that they implement things and the way in which they launch that fork. And I will be honest, we are part of the reason, not necessarily us personally, but the DeFi Alliance is part of the reason that we have had a bit of an elongation or postponement on it, because we want to make sure that it does work for everybody from the moment that it turns on, and we don't have this sort of delay where the blockchain's half functional for the period of time, however long it takes to repair. So that back and forth has been essential to make sure that this works out properly. There's an example of where the DeFi Alliance just in, the last few weeks has been incredibly utile. With respect to outreach as well is another big one. So the DeFi Alliance is going to LA. I want to say LA NFT, but I may have that mixed up. There's so many conferences that I've been to in the last year. Let me just get the name of the exact conference that the DeFi Alliance is going to. 1 second. But yes, we're doing a lot of outreach to the community, and we're making sure that we get out there to let people know about Cardano's existence as often as possible, right? Because if there aren't people out there singing the word of Cardano, letting people know what it is that we're doing, then it becomes very difficult to advertise and get new people on board. So from both aspects, we're doing a lot of work, and it's fantastic. We want to keep it. We want to keep it going. And the name of the conference is NFT Expoverse in LA.
Cool. Yeah. So some West Coast vibes for the DeFi Alliance pretty soon. That's good. Yeah, no, I love that, man. I love that, you guys have been working together for such a long time. And obviously Vasil, do you think that Vasil will be delayed a little more? I've been talking to a few people. It seems like it could be. I don't care if it is delayed more, if it's not delayed more, but do you have a read on like what's kind of going on there?
I think like, I don't want to give a firm answer because I'm not an official source and anything I say could be wrong, right? So just be aware of that. My gut feel is that we may have another week or two on top of what we think.
Yeah.
But I don't expect there to be much more.
That's what I've been hearing too, just from the people I've been talking to in the know, you know.
Yeah.
But that's fine with me because it's not about, you know, like we're in kind of this bear market. What is a hard fork going to do other than like, if we do it properly, it's going to do a lot. So we better do it. You know, I mean, we better take our time. One thing I wanted to ask too, which is so cool. So let's get into VYFI. What have you guys, because when I was talking to another employee, Johnny, it seems like VYFI is building a DeFi ecosystem. Now, I've been following you guys. I've done a few videos mentioning you guys throughout the last, I don't know, 6-7 months.
Thank you.
Do you want to give absolutely, man. Do you want to give kind of like an overview of what VYFI is, maybe too?
We'll try it as an elevator pitch because it can sometimes be a bit mind-boggling because it's a bit of a redesign of how we think of how we currently do a DEX, right? But essentially, we have an issue with a lot of DEXs currently where they just mint tokens infinitely, and then those tokens are distributed and sold down.
Yes. That is my issue sometimes with DEXs.
Yeah, absolutely. Right. So the answer to this is that you need to create a system that is able to deliver an actual income to that token to give it upwards pressure. Because the reality is you can't just mint value into existence. That's not how value works.
Well, it's like printing. It's, you know, it's the same. We demonize printing money, but it's kind of what we're doing with a lot of
the same thing, right? It is actually the same thing. And I mean, I definitely don't want to go Marxist on anything, but Marxist value theory does hold an interesting point, which is that
you'll have to tell me this. Yeah.
But it does hold a very interesting point, which is that value is in the eye of the beholder, right? But if you got twice as many things that the person beholds, this isn't a quote, of course, this is like my gist of part of the theory. You got twice as many things, all of a sudden the person's going to be half as interested in having one of them.
Supply and demand. Yep.
Right. And well, this is from a value perspective. He wouldn't call it supply and demand. But from a value perspective, if I just keep pushing it out, the value naturally goes down. Supply and demand, the value naturally goes down. It doesn't matter how you approach value. If I just mint, the value goes down. Now, what we need to do is we need to create a sustainable ecosystem, one that can hold up the value a little. What a terribly long elevator pitch. You got off 6 months ago.
This is great. This is great.
And the way that we do that is with a mechanism that we call the VY bar, where essentially we distribute a portion of the fees that are generated on our DEX, and we convert those into VYFI, and then we distribute it to the holders that hold VYFI token and have staked at our smart contract called the bar. Now, what we really want to do is we want to be delivering as many sources of upwards pressure to our token through this bar mechanism now. So we've got our DEX that collects fees and converts it to VYFI, distributes it to those staked at our bar. And to do that, of course, we have to buy VYFI. Then we're also going to add our NFT project into that, whereby 6% of all the royalties generated from our NFT are converted into VYFI and distributed to people that have staked VYFI at our bar. Then we're going to add in our auto harvester, and our auto harvester is the next phase of our project once we finish the DEX. It's the final build, and that's essentially a system that allows users with no experience in yield farming to access an automated yield farmer, where they can just put in their Cardano, not think about it, and that goes off and yields farms for them on their behalf. And we are going to be talking about that later. But 15% of all the yield generated from that auto harvester is converted to VYFI and distributed to the people that hold at our bar.
If that can work, and there's like 15, that's so interesting to me, because that's like what, financial advisors, if they can make their clients profit and make 15%, I'm not, I don't like like if you were one, but I don't always like, or in that industry, there's just a lot of potentially, maybe BS, or it's not right for everybody. And I think though, that is something that some of the ones that I respect that I listen to say. It's like, if we can, make 15% ourselves and deliver profitability for our clients, it's really
everyone wins, right? And that's exactly what we're aiming to do. And the way that and this is the most important part to note though, is that rather than taking the 15% for ourselves, right, as would most people, we convert it to VYFI and distribute it to the holders of our token. So this system is looking to be decentralized, and the owners of the system are the ones that hold the token, which is why we also have a governance, of course. So the actual system itself is all designed to support the value of the yield farm on our DEX.
Yeah.
Right.
Which is, I believe, is smart too. And if you can keep building these pieces to support it, that's exactly it.
That means we can yield farm. That means you can actually have a sustainable yield farm.
Yeah.
Right. The aim being, if we could get, let's say 300, 400 million onto our auto harvester, which isn't a crazy amount, particularly when you look at existing auto harvesters like Yearn or Harvest Finance. A value like that on our auto harvester, like, I don't know what the returns will be in the future, right? I really don't. But let's say that we managed to get a return of 5%, right? That's a return, right? 5% on 300 million would be what? 15 million, right? Now, if in that year we mint 15 million tokens on our yield farm, to people that have providing liquidity on our DEX, that means we've essentially supplied 1 ADA for every token that we've minted, which means we've supported a baseline price of 1 ADA for that entire farm, right? Now, then of course there's more than just the auto harvester, but that auto harvester and the link of the auto harvester to the bar is going to be a world first, as far as I'm aware.
So what Steven's talking about is something I wanted to get into a little more too, because this auto harvester is also going to be leveraging machine learning and things of that nature. I wanted to get into the specifics. Does that mean artificial intelligence? Does that mean, is it up and running? Is it coming later? And all of the specifics there. And also, like, what made you guys like where is that coming from? Because I know that you have the financial background, but like, where is that software and system and like the confidence to pull that off in DeFi coming from on your team? Because that's like, maybe it's from you, maybe it's from your background too, but like, where is that coming from?
I wish I could throw neural nets together. That's a really useful skill to have. I know a few people that can do it. It's just not in my skill set. Let's start with that first one. Where's the skill coming from? That's a really important question. It's my father. So my father runs he used to. Now he's actually retired. In the last 6 months, he's retired himself to mushroom farming, and he's running neural nets to run his mushroom farm on Arduino. Oh God, he's such a nerd. Anyway, he ran an AREIT. So an AREIT is an exchange traded real estate fund. You worked in real estate. I'm sure you know what an AREIT is.
Yeah. The accent got me for a second. I'm like, okay, what is that?
Yeah, it's the accent. Yeah, true. And I think in Australia they're called AREITs. In America they're called EREITs.
Okay.
It's a different letter, but they're the exact same instrument, right? They're it's basically a fund that manages a group of houses, right? And my dad's essential job was to select the houses that they would be going out to purchase. So the way that he did that, he's a theoretical statistician, and he built neural nets to basically take in data points of property value and then to work out which suburbs had the points that added value, but that value hadn't yet been priced in. So then they would basically be in front of the speculation, trying to purchase houses in front of where the prices were pumping, which really the Australian housing market, you could have bought anywhere and you would have done well, but that's a different story. And then from there, he expanded out and he built fintech. It's not fintech. It's called real estate. It's called real estate tech, but it's got some kind of shorthand that I can't remember. Prop tech, that's the one, Property Technologies.
Interesting.
He built a prop tech firm that essentially designed again, a neural net, but this time it was for businesses that wanted to create new franchises of their business. And then based on what their business was doing, they would have a target demographic, a target market, and then they would have like walk-ins. What was your most common walk-in as a coffee shop, right? And who are you focusing on? You're focusing on the work, blah, blah. They're taking all this information from the business, and then they would organize it into catchments around the cities in Australia. And then they would use the neural nets to find out essentially where's the best places to place your franchise across those urban catchments.
Okay, that makes sense now for VYFI's purposes too. That's very interesting.
So essentially, we're doing a bit of a redesign of that model of the prop tech, of the property, the property speculation, where essentially you've got a bunch of risk factors and you've got a bunch of factors that drive value. And then you collect these factors and you have the neural net think about it. Now, we haven't built the neural net that we're using on Cardano at all yet. No, we don't have the data available, right? Data for neural nets, you require very, very large volumes to be able to create at least a meaningful result, right? What we have done though, is we have built trading bots of this nature on other blockchains. And most importantly, and I wish I could say we've had good results recently, but of course in the last 4 months, it's pretty hard to have good results. Prior to the last 4 months, we were up like 300%, but more even, but oh well.
No, it's interesting. And like, it's kind of, to me, a little bit naive to look at any results from just 1 year. Like, we should really give projects, I think, a lot of time to build those
come together,
results, you know
right?
what I mean? With that, what I want to also touch on too, we can go back to this as well, but I wanted to get your take on Vasil, because I was wondering if you're waiting on things like Vasil and maybe other improvements to the network to have a big enough availability of data for things like your machine learning and any other effects that Vasil might have too.
Yeah, the biggest effect that I hope Vasil will have is on user experience, increasing the volume of transactions that can be withstood. We have had circumstances, like even when we just did our NFT sale, right? We had everyone start at the NFT sale, and then the blockchain had a fizzle for like 3 minutes, which is fine. You know, it's only 3 minutes, but it's still a negative user experience, right? And if we remember back to the Sunday swap launch days, you know, like Jesus, we couldn't do anything for weeks. So I'm hoping that we'll be able to stave off a lot of those user experience based, and it does bring a lot of tools into the system which are useful for the back end, right? So it does bring development tools, and it brings us the capacity to be able to handle more data. I guess the way to put it is we can now send smaller data packets to perform the same transaction, saving in transaction fees and also saving in processing times.
Yeah, that's a good way to put it from what I've heard too. Super exciting stuff.
It is really exciting. And we're waiting for Vasil to launch our NFT staking and token staking smart contracts. And we're going to be releasing, as far as I'm aware, the first smart contracts that are fully integrated with the PAB, which has made it a bit hard because they didn't upgrade the PAB instantaneously for Vasil, and then we had to do a whole bunch of stuff. But anyway, that's another story. Yeah, we're really excited about that.
Yeah, no, I am too. Is the PAB now called the DAB, by the way? Is it? We're
still referring to it as the PAB, but like, yeah, I think it is referred to as the DAB.
Yeah, no, I just think it's funny, but all right. So basically, with the NFTs and the ecosystem, do you want to give a quick rundown of what the NFT? Because I know that you guys were some of the first, like one of the first DeFi projects to actually, you know, take a look at NFTs and how to incorporate them and in your ecosystem. Can you talk about what you currently have out? Obviously, you know, there was maybe demand to make more or make more that are more affordable, and what the NFTs will actually be doing.
Absolutely. Let's start with how the NFT came about. So we conducted our ICO, and we wanted to give just a thank you to everyone that participated in the ICO. And from there, we handed out a free NFT to everyone that participated just to say thanks. Then we wanted to do a fun airdrop of VYFI to everyone that participated while we were waiting for some things to be built. And we built an NFT vault where the users could stake the NFT to earn VYFI. And then from there, we started having other projects that were like, oh, can we also stake your NFT to earn some of our token as well? And then we realized, oh, wow, we've actually got an entire business model on our hands here. So we essentially dove in head first, and we had 2,000 NFTs to begin with, and that's our 1,950 purples and 50 golds. The floor on those is about 790 or 750. I don't know. It fluctuates every day, somewhere between 750 and 950. But we did get to a floor price of 4,000 on the purples, which was wild when they first pumped. And then our gold, which is the rarer one, there aren't any on the market, but the last one sold for 11,000, I believe. So that's Cardano, of course. And we have basically been developing that ever since. We've actually right now, we've released the white NFT. You can actually get that at app.vyfi.io right now. And you can essentially stake the NFT to engage in projects that haven't launched yet. So it's very similar to a launchpad or we call it an IFO, initial farm offering. When we do it with tokens, we don't have a word for it on NFTs yet. We still call it IFO, but we should call it like initial NFT offering, like INFTO.
Yeah, man, there's a new term every week.
Yeah, right. Like it's weird when you're in a position that you have to invent these terms.
Yeah.
So essentially, it's, as far as I'm aware, it's one of the only in all of crypto that you can actually use an NFT to access new projects. I'm not going to say it's the only. There's a lot going on in crypto. I can't keep up with all of it.
Yeah, no, I would be hesitant, and I don't know, because I've just seen some crazy stuff on Binance Smart Chain, and it doesn't mean that all that stuff like was built properly or was done right, but there is a lot of concepts on different blockchains that we could all kind of learn from and maybe make more secure and better. But yeah, there's been a lot of stuff tried. It's surprising how much
Binance was my master. That's where I originally was doing all of my trading and realized, well, I started in Ethereum, of course, but then Ethereum was way too expensive. So as soon as Binance came around, I was like, yep, let's move. And I have to say that it was really rather incredible, the things that they've tried, the stuff that was going to fail. And it's like, how did you not see that was going to fail? Like magic internet money. Oh my God.
Oh yeah.
I think MIM is still going.
What's that?
I think MIM is still going. Yeah, they recovered.
I don't even, like I was talking to a dev about this a few months ago. It's like these hard forks of some of these DAOs are just so unsustainable in their tokenomics, and it's no wonder why they either have failed or they will fail. But I think what's kind of cool is like a lot of us that came to Cardano at least have seen other ecosystems, and maybe we're aware of them too. So we're able to kind of like, even though things are built a little bit different on Cardano, we're able to see a lot of concepts and see what works and what doesn't, and what maybe could work too, So I agree, man.
Absolutely. And that's why Cardano is super exciting, right? Cardano is essentially a more mathematically secure form of all the others. So I definitely think that there's going to be a lot of development that we can feel more confident with in Cardano, at least from a technical perspective, in terms of not having your funds stolen. And I hope that Cardano is a more responsible community than BNB. Oh God.
Yeah, I hope. Like that's the thing. Like it's currently the culture, and there's gonna always be projects that aren't following that culture and stuff. But we could only hope that we maintain that, man. Absolutely.
That's exactly it, right? We can only hope that we maintain it. And at the moment, we're doing it well. So I want to continue pushing that responsibility in crypto, right? Because there is a responsibility to project owners and people that create these things, to not just run away with money because they can quickly. It's about trying to actually build technology, right? Anyway, that's a bit of an aside. I do have good hopes in Cardano that we're going to be a lot more responsible than BNB. And to be honest, that shouldn't be too hard.
No, the bar, the bar's
not high.
It's like, it's crazy, man. It's probably right now hard to get into like the top spots in BNB because there is some pretty good, I would say PancakeSwap has done pretty well in a lot of ways. But like but once you get from those top projects, man. Like there's like a lot. Yeah.
And it doesn't change the fact that PancakeSwap is still an unsustainable tokenomic, right? PancakeSwap's tokenomic, they mint, I think it's what, 360,000 tokens a day and burn about 230,000 tokens a day, something like that. You can see it in their notebook, in their books, what's it called, their Git books. It changes, it remains stable. That's just, I can't remember exactly off the top of my head. That's unstable though. You're minting more than you're burning.
Right. Yeah. So it's interesting. So what I wanted to get to is just to cover our bases. So we talked about the NFTs, we talked about machine learning, but is there, with redesigning the prop tech, you know, and that's really cool about your dad. Did you want to go into like how the redesign worked? Because I think we may have jumped around before you kind of alluded to like how this is now changing from the prop tech, identifying these areas for either franchises or, you know, and going into crypto, you know?
Yeah, absolutely. Essentially trading's trading, right? So whether you're trading property or you're trading, you know, an asset. Oh wait, property is an asset. Go figure. So look at that. Trading is trading, right? So essentially whatever it is that you're trading, there are transferable skills directly to trading other things. That's pretty self-evident. But as you stated, you know, I am the trader. I'm the person with the financial experience, and the strategy that we're trading is mine. So this is, look, I feel like it's really boasting saying the strategy that I'm trading is mine. The strategy that I'm trading is the same strategy.
Pressure too. You're taking all on. You might want to. Yeah. No, I'm just kidding.
Yeah, it's all on me. No, that I'm not reinventing any kind of wheel, right? I'm literally doing the exact same trading strategies that banks have been doing with liquidity pools since banks have been invented, right? And we can think about it from the point of view of what a liquidity pool is on an exchange's platform, right? The liquidity pool on an exchange's platform is delivering two currencies. These two currencies are then traded against each other. And as you trade these two currencies against each other, right, what you actually get is a difference or a change in the amount you hold of one currency or the other. So it's the exact same way that it works with currency exchange at a bank. You know, if I go to the bank and I want to change Australian dollar for US dollar, the bank has got a big pile of the Australian dollar and a big pile of US dollar. I hand them the Australian dollar, they add it to the Australian dollar pile, and then they pull US dollar out of the US dollar pile and give it to me, but they give me less than what I put into the Australian dollar pile, right? Now, as the values of those currencies changes, the sizes of my piles continue changing. Right. But the idea is that over the long term, those fees that I'm making will add up and my piles will get bigger, right? Now, this form of trading has existed forever and is very slow, right? If you look at the returns even on MintSwap of what you're getting in terms of an APR from the daily trading volume, you'll find that it rarely goes above 3-4%, right? And the reason for that is because this is a slow form of trading. When banks do this, they do it over a very long time frame. You know, the Royal Bank of Scotland, RBS, or Lloyd's, you know, they don't care about making money on it now. You know, they've been doing it for 300 years. So they're already up a fortune. They just keep doing it. What crypto has brought in is yield farming. Now, yield farming is where the actual platform rewards you for providing your liquidity to them, because in crypto, we have to crowdsource the liquidity. We don't just have a bank that holds it. So we have to motivate people to put their liquidity in. And to do that, we offer them a reward or a yield for putting their liquidity in to actually make the system work. Now, when we put our liquidity in, we still hold all the risk that a bank holds when they're doing their swaps between different currencies. We call that impermanent risk, right? Now, impermanent risk is a risk that's been held by banks for forever. It's not new mathematics. And you can trade impermanent risk, right? And the way that you trade impermanent risk in real life, this is real life, sorry. The way that you trade impermanent risks in the classic markets is what are called interest rate swaps, right? You hold a lot of, let's say, Argentinian peso, because I'm sorry, you just chose to buy a lot of Argentinian peso a few years back, right? But you were worried that the Argentinian peso was going to dump through the floor. So what do? If you're worried that the Argentinian peso is going to dump through the floor, well, that means now you've got a lot less US dollar, right? In the future after it's happened. That's your impermanent risk. How do you manage your impermanent risk? Well, you buy an interest rate swap with Argentina, where essentially you trade American interest for Argentinian interest. As their dollar's dumping, their interest rates go up and you profit from the increase in the interest rate. Right? Because if interest rates are going up, that means that they're trying to push down the value of their dollar. Now, Argentina is probably not a good example because their financial economy is a little destabilized, and this assumes that you've got an economy that's mildly stable. Maybe Japan would have been a much better option. But yeah, you probably lost a lot of money in that trade.
Can I ask one question on that? So
please.
when you're doing interest rate swaps, are you kind of trading the actual interest rate? So
yeah, you're switching like fixed
derivative.
You're switching fixed for variable. So what an interest rate swap is, let's say you have a loan in the US that you can fix for 1%, right? You can't do that now, but you could have a few months ago, right? And it's for $1 million. You've just bought $1 million of Argentinian peso. What you're going to do is you're going to loan that $1 million on a variable rate to the Argentinian government. I don't suggest doing this. The Argentinian government will not pay you back. They've gone bankrupt. Right. Right. But this is in the example. As I said, Japan probably would have been better. But you loan that out at a variable rate. Now, as their dollar starts to destabilize, in other words, inflation starts to go up and their dollar begins to lose value, the principal mechanism through which central banks manage inflation is by interest. So they raise interest rates in return for having their dollar being devalued. So what that means is that your repayment on your variable interest rate loan is going up, but your repayment on your fixed interest rate loan is staying where it is. So that's an interest rate swap, which you use to hedge yourself when you're holding a lot of currency risk in other currencies, right? That's one hedging instrument. There's many of them, but that's one of the principal hedging instruments when you're holding lots of foreign currency risk, right? Now, all the mathematics that guides this, and this is where let's bring it back for a moment. All the mathematics that guides these systems is the same mathematics that guides a liquidity pool, right? If you now imagine that I'm holding Ethereum against Pancake, right? Just as an example, what are the two currency risks that I'm holding? I'm holding Ethereum and Pancake. They move against each other. I can generate a yield on Ethereum. I can generate a fixed yield on Ethereum by putting it into is it 3.0, whatever it is, by putting it into ETH staking. And then I can take my Pancake and I can create a variable yield on Pancake Swap, right? So
that's so interesting to just note that banks have been using this mechanism, because I never have heard somebody say that before. Like it makes so much sense though.
Yeah, we're reinventing how it's done, but we're not reinventing the wheel.
It's a concept. Yeah, it rhymes exactly with what banks have done. Now that you
exactly.
Say that's
right. So this mathematics that are guiding these systems are very, very similar to the mathematics in bonds and the mathematics in interest. Because what you have a yield bearing asset, which is the LP token. And then you have the risk of the underlying asset, which are the currencies, right? What's an interest rate swap? An interest rate swap is you have the underlying risk, which is the currencies, and you have a yield, which is the interest. Right. So these mathematics are very similar. Now, within that, we're not reinventing any kind of wheel here either. These bond instruments have been AI'd to the buggery. It's very difficult to touch the bond markets without facing down massive hedge funds that have got incredibly complex neural nets and incredibly complex AI systems that are managing the trades on bond markets.
Yeah.
Why? Because the bond markets, every market is AI now, let's be honest. But the reason is because the bond markets have got the largest liquidity of any market in the world, right? They've got a daily liquidity of $2 trillion a day. Everyone thinks currency is the biggest. No, it's bonds. But beyond that, we've got the situation where these new systems, which use the same mathematics, can be improved by implementing systems that already exist in classical finance, right? And what are these systems that already exist in classical finance? Just like what my dad was doing in property, but for interest rates. And
that's what so
that's
like
the realization that I had. That was the, I think I get it now moment. This was about 2 years ago.
So there's no way that this is going, like, nobody in the DeFi Alliance is going to be able to copy exactly this, because it's so unique to your story, your family, and your background.
It's my background, my family, it's a very unique design, and it very much comes from my unique set of experiences. Yes.
That's so interesting, man. Yeah, no, absolutely. I'm excited to see this thing, man. So is it going to have, like, one last question to Steven, and then, you know, I don't want to take too much time, so we'll let you go soon, but is it going to have different risk profiles?
That's exactly how we want to design. And that's the big advantage of having it as an AI. So if you go, and I highly recommend for this little bit, go to harvest.finance and throw up a screenshot of harvest.finance. Okay. And these systems, as they function right now, when you engage with an auto harvesting vault, the vault essentially just has a set strategy. It's fixed. And that fixed strategy is run. Now, you as a user who engages with a fixed strategy, you still hold all the risk of having that fixed strategy, which means if you don't understand how that risk is working and what is impacting that actual strategy's value, you have just as much risk as going out and buying that strategy directly, except you're paying 20% of the profits for the pleasure of having to still manage your own risk profile. So, and that's why those systems on Ethereum, they actually were designed to assist people in overcoming high gas fees with small amounts of income, so everyone could farm together. They weren't originally designed to be an automated farming system on people's behalf. So when you go look at these systems, they're very complex, and they're designed for people that already know how to engage with the ecosystem. By having an AI that manages the risk profiles, we essentially have a list of currency pairs, a list of risk, impermanent risk of holding those currency pairs, and then our AI is able to distribute according to their current risk profiles, whether they're a high, medium, low investment. Then you face off to compare the yields in the low investment portfolio, in the medium investment portfolio, and in the high investment portfolio. And then when you hit a certain threshold, you readjust the portfolio to match what the machine tells you is the optimal portfolio. They're the steps hyper simplified, right? But essentially that means that we're able to just show the group of tokens that represent our low risk portfolio are able to be shown as a low risk option. Same with the medium as a medium risk option, and the high risk as a high risk option. And we also want to have a stable coin option so that we're automatically optimizing for the best stable coin yields, right? Yeah. And in so doing, it makes it a lot easier for the user to be able to press a button and say, oh, I want low risk, and then just enter the low risk pool. And then from there, once they've entered it, we give them the tools to be able to see what's happening right now to their investment, and also the tools to learn and understand what that's actually telling them.
That's super, super fascinating. So we have a lot to look forward to from you guys.
I think so, yeah.
I meant to ask this in the Vasil segment. This will be my last question. How are your devs doing with testnet? How are the devs that you got working doing with testnet? If you want to give any shout outs to any of the devs, feel free. I know
I'm going to give a shout out to Franco and Manu, just very briefly.
Yeah, I love shouting out devs. I think it's awesome.
No, they're absolute machines. Ryan, I always give a perpetual shout out to Ryan, but Ryan is fairly active talking to our community. He's like the face of our devs. So he's out there actually talking to the community. So he gets some props. I want to give it to the Invisible Boys. You know, Franco and Manu are the leads of the people that are working, and they are machines. They've both got PhDs, and they're both academics that have moved into this field in the last 2 years. And they're just invaluable assets. Anyway, so how are they doing? It's with this, because we're using the PAB, and because we've designed a unique implementation of the PAB, This move to Vasil has been a bit of a jarring one for us. We've had to troubleshoot. We're still going through. No, we've mostly troubleshooted it now. We think we'll be up on. We think we'll have our beta testers running the beta tests on our contracts next week. And we've sent off the code to the internal auditors. So we've put together the documentation. We've sent it off to the internal auditors. So we've gotten through it. But how has it been? It was harder than we were expecting with the Vasil update. Let's just say that.
Yeah. Yeah. Is there any, like, from just, talking to your devs, is there any like excitement from the, just maybe not for VYFI specifically, but just of like the reaction to the testnet? Because I've heard both. I've heard it's challenging in ways, and then there's also so much to learn that sometimes
I think there is a lot to learn. I reckon if you asked any of our devs right at this moment, they would probably tell you that the testnet's the biggest piece of shit in the world. But that's not because it is, right? That's not because it is. That's because they've been working with it day in, day out for the last 3 months trying to figure shit out. So
it's like the saying, family, family, when it's like fish, after 3 days, they start to stink or something. That's
exactly it.
It's just when you spend too much time on it, because I knew exactly what you meant when you said that. So like, because like people are working a lot right now on the testnet. So,
absolutely,
and I've heard both angles. I've heard there's so much to learn and do that it's overwhelming, and they're so excited about that at the same time.
What's happening, right? That's exactly it. And that's where I guess we're fortunate that we have a team that's really on the forefront of it.
Yeah.
They've got a very high capacity with the testnet. We've got a high enough capacity with the testnet that we've been able to fully integrate the PAB, and we've done it with we've actually superseded the chain index. So we don't even need to use the chain index to integrate the PAB, and we're actually able to swap between the chain index or our other methodology at any point in time with the click of a button. So, we've really given the testnet a lot of good work. And I think 2 of our guys are currently on a 2-week holiday. I reckon if you ask them when they get back, they'll be back to being very excited.
Yeah, no, that's awesome. I'm happy that they're at a holiday too. But Steven, man, thank you so much for coming on. We're super excited to just go through this crypto journey with you. I know the audience is too.
Thank you for having me on, mate. It's been great fun.
Yeah, no, absolutely. We'll definitely do stuff in the future. Any finals for the audience?
The only final thing I want to say for the audience is follow us on our socials. We've got an Instagram, Facebook, but more so Twitter and Discord and Telegram.
We'll put it all in the description.
Yep, and definitely check out our DApp, app.vyfi.io. And if you're feeling a bit keen, go in, buy yourself a couple of white NFTs and start staking and engaging. We'd love to see you there.
Cool. So that's Steven from VYFI, and that's Jay Crypto, and we are out.